welcome back, everybody. I hope you had a good chance to drink a nice cup of coffee, but even more, had a good chance to interact with one another. Because that is what we're here for, to interact and engage, and hopefully take away those sparks that will transform the things that we have been doing together. So it's my absolute pleasure now to introduce to you Dante Desparte. Welcome on stage. And he is the Vice Chair of the Libra Association. Welcome.
Good afternoon, everyone. I'm delighted to be here in Malaga, Spain, and to share with you just a general update about a little project you might have heard about called the Libra Association in Libra, which in many respects has helped advance the conversation about the role that blockchain can play and how we can advance opportunities for responsible financial services innovation, where innovating and regulating are not in competition with one another. So I have a few slides to go through this afternoon. One is a general sort of truth that we can accept, that the internet has changed the world, and that what the internet has done with communication and information sharing by removing friction has effectively democratized access to knowledge and communication, and with it has created an enormous amount of prosperity for people and flattening barriers. And yet, that same reality has not necessarily taken place in finance, and particularly in payments, which is the subject of the conversation this afternoon. So the financial networks of today, and particularly again focused on payments, look very much like the telecoms networks before the internet. So imagine a world in which a Gmail account could not send an email to a Hotmail account, and effectively you had a walled garden. Very much the issue that we face today in payments is not dissimilar to that. And make no mistake, this is not singularly an opportunity for emerging and developing countries to pull more people into basic financial access. It's also very much an issue in advanced markets around the world as well. So part of what we're trying to develop with the Libra Association, the Libra project, is a core transport layer for payments, where value transfer can happen at a low friction, high trust manner, but at the same time afford people the same luxuries of a properly regulated system. So part of addressing these inefficiencies we see as an opportunity, which is to remove the high cost of sending money on a peer-to-peer basis, would enable effectively more of the money that people earn to go back into the very hands of the end users and the people that they want to buy and transact with. And one example of this is the case study of remittances. So we live in a world today where we need to move from billions of combined development aid to trillions if we have any hope as a planet of achieving the Sustainable Development Goals. And one of the very best ways to do this is through remittance cash flows, which are today the world's most important cash flow. Projected at more than $700 billion a year, this cash flow is stubbornly stuck at 7% cost to transfer on average. Meanwhile, the UN has called for a target of 3%. Part of what the Libra project is all about is removing the friction that keeps that stubborn cost at 7%, effectively putting billions of dollars back to use into the hands of real people, much the same way the internet and items like instant messaging has democratized access to information sharing. So with this, we could turn the script around. Instead of looking and observing these problems as curiosities that we can't fix, we think there's an opportunity to build a coalition that can empower people, billions of people who are on the margins today. So today there's more than 1.7 billion people who don't have a bank account, 1.3 million who are underbanked, but yet of that number, roughly 1 billion have access to an internet-connected mobile phone. And if that internet-connected mobile phone is the bottom rung of a payment network, how can we achieve even the first of the UN SDGs, eradicating extreme poverty, with this many people on the margins of payments and finance today? There's an opportunity. So, and I must also say that this is an opportunity, much as we'll see in the afternoon's conversations and panels, that is not in isolation. While the Libra Association and the Libra project, of course, has garnered a lot of attention and has accelerated the conversation about central bank issued digital currencies and others, we're not alone. Today, There are innovations in Asia primarily that transfer more than $38 trillion on a peer-to-peer basis. The Chinese central bank has announced acceleration of its plans for a digital yuan or a digital renminbi. And so we think this entire conversation is not a zero-sum proposition where Libra has to succeed at somebody else's expense, but rather an opportunity for an all ships rising moment, not only for the whole crypto asset space and digital asset space, but for how this can impact regulators, central banks, policymakers, but most importantly, people. So our vision, as you may have seen and heard, is of course to build a secure and regulated payment network that can empower billions of people. That vision is the responsibility of the Libra Association, not any one company or any one group. And as the old adage goes, if you want to go fast, go alone. If you want to go far, go together. And in that very spirit, the association is now beginning to take shape. Initially with 21 organizations that convened in Geneva on October 14th. But by the time the project goes live, our vision is to have 100 organizations that are a part of the Libra Association. And one thing that's really important in this effort is that the standard would be open. So effectively a veritable internet for payments, such that any responsible actor can develop in this platform and can build supporting solutions. The Libra coin, much has been said about what is it designed to do. Let me reassure you in the room, particularly those who have the steady hand of regulating and controlling risk in the global financial system, that the only purpose of the Libra coin is to consummate a payment and to consummate a transaction. And I'll give you more details about why it is designed in that manner, but the best proxy is if you think of the case study of mobile payments, M-Pesa in Kenya being a very well-known example, airtime is merely a proxy for payment settlement. In a blockchain-based system, a stablecoin, or in this instance, a payment token, is nothing more than a proxy for payment or settlement on a blockchain-based system. If we just had the blockchain but not the token, we wouldn't be able to finish the job. So the association, of course, is independent. The association will have really three charges. The first is governance for the entire project, and a governance model that requires a supermajority voting process for any large changes to this project. This almost flips the pyramid on its head. When you think about how most decisions are made in large organizations, it's typically the smallest bodies that make the most consequential decisions. In this model, we would turn to the council for the most complicated decisions. The association would also be responsible for managing the Libra reserve, and the reserve is designed to back Libra coins at all time without any fractionalization, without any risk-taking, and effectively putting those assets in the care, custody, and control of well-regulated, well-capitalized banks and financial institutions. And then lastly, the association, of course, will manage an open source technology roadmap, right? So the process of building this technology is to put this into the hands of the world and to facilitate responsible financial services innovation such that we can start addressing many of the challenges I think we have today on the planet. So the reserve will not, the association rather, will not have any powers akin to those in a central banker's hands. We will not be issuing money, we cannot control interest rate, and hence the definition of a stable coin, or in this case, a global stable coin. It is effectively a digital asset that is backed at all times by stable assets. And so while the final composition of the Libra reserve has not been fully ratified, think of it a little bit like the special drawing rights at the IMF or the World Bank, which effectively is a 50-year-old concept that allows for a fixed basket of currencies to be made available. And with that fixed basket of currencies, there's a global utility that you wouldn't have if you defined this digital token by one single asset like a euro or a dollar. It might make it politically a little easier, but it would diminish the utility as a global means of payment. So that would be one point that's worth just highlighting about the construct of the reserve. Another point that's worth highlighting as well is that throughout this process, the association aims to be regulated. So every time someone says the Libra Association was dealt a terrible blow because a regulator calls for high standards and high scrutiny, our answer is no. You're effectively confirming our position from the outset. There is no setback in calling for high standards. And so one of the reasons we're established in the way we're establishing this project is to have a payment system regulatory regime for it, to be able to report and conform with financial risk management and combating illicit finance and all the rest. And then the last couple of points I would make is that the project is designed to be open, right? So much the same way, back to the wave of the internet sort of revolution before it, that an open standard here would also take away the risk and a lot of the technology risk that many developers and other responsible actors carry today in determining which blockchain standard is the best and in determining which technology they should use. What we're trying to facilitate here is an acceleration. Digital assets, digital payments, cryptocurrencies are a decade old as a concept. The concept of a reserve basket is a 50-year-old concept. The concept of a payment association is also 60 or 70 years old. If you think about every construct of this project is not necessarily new. So if nothing about this is new, why the ire? Why the enthusiasm? Why the headlines? Why the public hearings? I think what we have to acknowledge is that we're ultimately challenging many aspects of the current system, and particularly the payments systems, that have left billions of people behind. And I would offer that we can flip the script and turn that narrative upside down and start turning the 1.7 billion people on the margins of today's networks into future buyers, future consumers, and give them access to greater opportunities. So that really is what the Libra project is all about. With that, I have a few minutes left, but I will say thank you because I know we have to buy back a little bit of time, and then we have a panel coming up shortly to discuss stablecoins in greater depth. Thanks again.
Thank you so much, Dante. It's very enlightening. Very good to see how Libra is welcoming conversations and welcoming regulations. And as such, I would very much welcome our next guest on stage, Mr. Oliver Garzon, the Director General with FISMA at the European Commission. Welcome.
Does that work? Okay, this one works. Good afternoon. Well, no, I'm the boring regulator, so it will not be as entertaining as what you just heard. So we do boring, we do cautious, this type of things. Thank you for inviting me to speak this great place and wonderfully organized events. It's quite timely, as the previous speaker noticed. The policy and regulatory attention to crypto assets have no doubt evolved as we see this market develop. Remember, crypto assets are very much of a moving target. I mean, from the peak in late 2017, then all of the focus was on speculative risks and volatility, to the surge in initial coin offerings in 2018, and 2019 is no doubt the year of stable coins. So it's interesting this because you see all the multiple facets of stable coin, of these crypto assets. And of course we have to care for all of them, including those that are still to discover. And stablecoins might be what ultimately makes blockchain mainstream and catapults the innovation as well as the issues into an entirely new and systemic scale. And of course, from the point of view of the regulators or policy, regulatory frameworks or supervisors should be ready for this. And they should be ready in all the multiple aspects that these instruments raise. I mean, of course, financial regulation, payments, competition, data protection. Because if, as the previous speaker said, none of this is new, the combination is new, and in some cases the scale. But I'll come back on this. At the European Commission, we take in principle a pro-innovation approach in the financial sector. We want to promote the uptake of technology, which was also one underpinning pillar of our 2018 FinTech Action Plan, which we have implemented almost in full as we speak. Our pro-innovation stance is based on our assessment that technological innovations support accesses to finance. It underpins operational efficiency, it provides new competitive dynamics in financial markets, it inspires further innovation, and we firmly believe that we should seize the opportunities that emerging technologies present while trying to mitigate the risks that may come along with them. Our primary objective is better and more competitive, convenient and secure financial services to consumers. But our concern remains to ensure investor protection, market integrity, and of course, financial stability. On blockchain, more specifically, the European Commission has identified it as a foundational and transformative technology, which is why we are interested in promoting its application across sectors and in creating policy and regulatory environments which allows European companies to be among the top innovators in this field. But taking an interest in blockchain means having a deeper look at crypto assets, because ultimately that is what they are. Chains of crypto assets transaction, irrespective of whether these assets represent monetary value, some other value, or simply data, which is a value in itself. So we've been closely following the development of crypto assets over the past years. And in January this year, both the European Banking Authority and the European Securities and Market Authority provided the Commission with advice exploring the applicability and suitability of our existing financial services framework to crypto assets. We also work very closely with our international partners in the FSB and the G7 as well as bilaterally, and I'm very, very happy to see colleagues from the Japanese authorities, because we have specifically good cooperation with the colleagues in particular JFSC and the Bank of Japan. So what the report confirmed, and it was not really a surprise, is that some crypto assets are financial instruments under EU regulations and some are not. Most of them, however, are not. And, what the reports also confirmed is that whether they are financial instruments or not, they actually trigger the same concerns in terms of consumer and investor protection, because this is not really what makes the difference here. So there is a case in trying to define the right regulatory framework that allows us to have appropriate regulation for this instrument. Because the advice goes on to explain that even when crypto assets qualify as financial instruments, applying existing legislation raises very often very complex legal and practical questions. So we are currently assessing how best to take these advices forward, building also on our own monitoring and engagement in international work, as I just said, on our approach to innovation. You know that President-elect Mrs. von der Leyen, in a mission statement to my boss, Mr. Dombrovskis, called for a common approach with member states on cryptocurrencies to ensure that we understand how to make the most of the opportunities they create and address the risks they may pose. And that's the reason why Mr. Dombrovskis announced during his confirmation hearing in the European Parliament that he intends to propose legislative action for a framework covering crypto assets as a result of both the mission given to him, the result of our intentional work, and of course the fact that crypto assets have once again risen to become at the center of much attention internationally. At the European Commission, as for many of my colleagues in the regulatory committee around the world, we had a remarkably busy summer this year following the announcement of so-called global stablecoin. I mean, as was just said, the notion of stablecoin is not particularly unique or an innovation in itself. As I said, crypto assets have been around for quite some time, and we have seen thousands of them emerging. The idea of a stabilization mechanism is somewhat newer, but is certainly not unique. And I note that stablecoins already exist on the market. Maybe having a stabilization mechanism that would consist of a basket of currencies and attempts to create a new private unit of account would be fairly unique and also audacious. What is sure is that it presents significant challenges, as many of the reactions from regulatory and political authorities have illustrated. There is no doubt that in this game size matters. And in this way, the potential reach of these global stablecoins changes the scale of the discussion and the risks surrounding crypto assets. So I think for methodological reasons, it would be good to distinguish the issue of how we should regulate stablecoins in general from the issue of how we should deal with so-called global stablecoins or crypto assets. That would help clarify the discussion. As I said, I mean, these global crypto assets create new challenge by their sheer size in area such as competition enforcement, of course, data protection, financial regulation, but also some sovereignty issues with regard with the very concept of currency. Crypto assets backed or linked to an underlying asset further blurs the lines for consumers and also test the regulatory perimeters around the world. Private entities that issue these potentially systemic instruments, as well as the ecosystem of service providers around them, such as brokers, exchanges, wallet providers, etc., should adhere to relevant regulation. And in the case of a truly global system, that's a challenge in itself. And it's not only about the service provided by the stablecoin provider. It's also about the services that are provided by third parties once this stablecoin is around. Think about people taking deposits in these stablecoins. Think about people granting loans in these stablecoins. In a sense, banking activity. In Europe, as I said, the situation is complicated because some of these assets seemingly have many features of e-monies, and we have an e-money directive, but at the same time, they come close to the definition of an alternative investment fund, or actually sometimes of a derivative contract. So with the information that is currently available, it's not possible to determine whether and how the existing legislation applies, but it is likely that none of them fits perfectly because they've not been conceived for this type of instrument. So coming back to the well-chosen title for this speech, will it be possible for stablecoins to survive the regulatory storm that they are currently in? Well, it's not for me to say, but I believe the jury is very much still out. As you may know, we have sent questions, in particular to Libra and the Calibra Foundation. Colleagues from other authorities in the world have sent questions. Parliamentary hearings have been taken place. Colleagues from competition authorities have sent questions as well. We need to understand a lot better what we're dealing with before we can take a view. What is for sure is that central bankers take a keen interest into this, and you may have noticed that the Bank of International Settlement announced today that they have created a special unit to deal with these issues, to be headed by Mr. Benoit Cœuré, who is currently finishing his term in the European Central Bank. And I think that's a very clear indication of the very keen interest that central bankers around the world are taking in the issue. One of our primary concerns here is to ensure financial stability as well as market integrity and a good level of consumer and investor protection. Furthermore, as we are legislating in the digital age with multiple challenges arising, we need to take a holistic approach, looking at this not only through the lens of financial services legislation, but together with the colleagues in the Commission of DG Connect, in other sectors as well, ensuring that we can adequately mitigate risks to privacy and fair competition, for instance. We believe that we can only realize the benefits of innovation if there is appropriate and proportionate regulation, which in return will instill trust and help with real mass adoption. I firmly believe that our job as legislators is to ensure innovation is regulated in and not regulated out. We need to make sure that all the risks that are identified are appropriately addressed to fully reap the benefits that crypto assets and technology in general may offer, in particular in the financial services. Thank you.
Thank you. Thank you, Mr. Oliver Garçon. It's been very good to hear the recurring theme about mitigating risk for us as consumers and protecting the consumers in this particular speech, and also how do we make sure that that the integrity and stability of our economies are still in place with all the interesting variables that have come to this. For my next guest, I would like to introduce Ms. Yoko Kawai from the Central Bank of Japan. Thank you so much.
Okay, thank you very much for the introduction. I am the one of the central bankers who are quite interested in the developments of the digital payment world. And I would like to shed some lights from the central bank's point of view today. Okay, let me see how it works. Okay, very good. Right, so the main question today is, are the central banks ready to issue the digital currencies? Let me just phrase it in this way. Here's the results of the survey, which asked 63 central banks the question, how likely is it that your central bank will issue a central bank digital currency, CBDC? So see, they're both in short term, 1 to 3 years, medium term, 1 to 6 years. More than half of the central banks say somewhat or very unlikely to issue the general purpose CBDC. Does this mean that most central banks are not interested in digital currencies? The answer, of course, is no. Definitely no. In the very same survey, including ourselves, Bank of Japan, 70% of the central banks answered that they have conducted or conducting CBDC-related research in one way or the other. Each central bank has its own motivations behind the scene. But one thing common is that we all know that we need to modernize ourselves in this digitalized world. The central banks are already providing the digital payment solutions to the wholesale users like private sector banks through the central bank deposit accounts. The banks, the private sector banks who have deposit accounts with the central bank can remit or receive money through those accounts, exactly like I or you remit or receive money through my bank account. That's a the digital money. So why are the central banks cautious in making one more step to offer the direct digital solution to the end users, like individuals or the non-bank corporations. Let me expand the word a little bit beyond the payment. Here is how the current monetary system works. So first, the central bank issues the currency. The one format is the material cash, like banknotes or the physical coins. And there also is a digital format of the central bank's money, which, as I said, as the reserve deposit format, deposited by the bank to the central banks. So, and in most countries where there are so many users of the money, there must be intermediaries who normally are the private sector banks to deliver money, which is issued by the central bank to the users. Private sector banks have deposit account with the central bank and receive money digitally or physically in the form of banknotes from the central bank and deliver them onto the end users. That's what they do. In addition, there are digital payments and remittance services like credit cards or digital wallets recently, which enable users to access the money. In many cases, these services are built upon the private sector bank accounts. In addition to intermediating money, private sector banks play other very important roles. They transform deposits to loans and multiply the amount of money. Once the bank makes loans, the recipients of the loans may deposit the money they receive to their bank accounts, and those banks may make new loans using those deposits. They recycle deposits. Through these steps, private sector banks can multiply the amount of money in the system. For example, the example of Japan, Bank of Japan is issuing close to 1 trillion euro equivalent physical cash, and additional 3 trillion equivalent of deposit for the private sector banks. So Bank of Japan releases approximately 4 trillion euro equivalent base money, which is the black circle in this picture. On the other hand, the aggregation of all private sector bank deposits and cash in the system is more than 10 trillion euro equivalent, which is a gray area of this, in this picture. This means that private sector banks is increasing the money by more than double through their deposit and loan steps. So in short, modern financial system is operated in the two-tier architecture. The central bank first issues the base money, and the private sector distribute them and also multiply the amount of money. In addition, private sector banks also conduct criminal prevention measures, for example, anti-money laundering or fraud checks. As a result, users like yourself and myself can use the money safely. Now, let's assume that central banks directly issues digital currency to the end users, either through the central bank's deposit accounts, directly accessible to the end users, or through digital tokens. End users can, in this world, now directly use the central bank's accounts or tokens to pay and remit. This change may inevitably reduce the number of the private sector banks or the size of the private sector banking. It may save the cost to the users, as the private sector banks, from many reasons, sometimes charge very heavy cost to the users. However, there may be other considerations to make, aside from the cost-saving merit. What will happen to the functions the private sector banks provide currently? Who will lend loans to us, and who will conduct the criminal checks for us? So, there are quite a few questions to ask. First of all, are the central banks technologically ready to open their accounts to numerous end users directly, or issue digital tokens. As said, many central banks, including ourselves, are studying hard, and some central banks are moving close to practice. But yet, especially for tokens which use new technologies and their legal nature is not yet established, it is an issue how to secure the credibility to prevent the counterfeit and to secure the accessibility for the sake of financial inclusion. In addition, so-called finality, which means that the once transaction is made, it will not be cancelled later, is another issue. And the Libra, the global stablecoin, has provoked the discussion of cross-border interoperability. I must admit that the existing system run by the central banks is not superbly capable of executing remittance from one country to the another country at low cost with speed. Also, we need to consider the possible gaps from the current system. If there are fewer banks, can the individuals and corporations borrow enough money? Will there be enough consumer protections against money laundering and frauds? You cannot expect the central banks to replace the private sector banks, as the central banks cannot lend money to risky borrowers in order to protect their credibility to back up their currency. Nor central banks they cannot indefinitely increase the number of employees and branches to conduct distributions and inspections, because it will be a burden on the taxpayers. Having said all the considerations, we may still want a CBDC. So here's the final question. In what format? When we discuss digital currencies, we have many types. It can be centralized ledger like bank deposit, it's on the left, or prepaid money or tokens. The value of the coins can be stable or unstable. Or the stable ones can be classified into, like they are stable against single currency or the basket of legal tenders. Issuers may vary as well. It can be private sector or public sector. Or there can be no issuer, like Bitcoin is. Also, the users may be limited to the wholesale, like the banks and the like, or be open to general public. So if the central banks were to issue the CBDC, we mainly consider two ways. One is a direct issuance, and the other is through the intermediaries like the private sector banks or the payment companies or digital wallets. But are they all? Isn't there anything else? Would it take too long a time for the authorities to develop the technologies and the skills if we were to open directly to the numerous users with certain security? One alternative I personally can think of, this is my very personal idea, that could be such that we make the private sector tokens safe enough by having the issue place a reserve equivalent to 100% of its value as the deposit to the central bank. If anything goes wrong, the central bank can release the reserve to pay it back to the holders of the tokens. This structure may work as if private tokens are backed by the central bank's deposit, while we can merit from the speed of the private sector initiatives. This is just an idea. Why we are not certain whether any central banks will issue the general purpose digital currency in a short while. One thing the central banks would like to do is to offer the solution to cater for the needs of the majority of our people. Financial inclusion is not a new concept. Central banks have built a legal tender system and private sector bank reserve system in order to issue enough money to be reached to as many people as possible within the country. And we also needed to pay the cost for the security to keep our payment system safe and to protect our individuals, our own people. But we know that we need to change as the world changes. So we are very much open to suggestions, And I am certain that today's panel discussion will also give me a good guidance, and I'm very much looking forward to it. Thank you very much.
So, is the world ready for a global digital currency? We've heard from Dante Disparte, of course, that in him building a case for a global stablecoin. Then we've heard Mr. Oliver Garçon saying that the jury is still out. And this has to do, of course, with the consumer protection and also ensuring stability. And then Ms. Yoko Kawai said what central banks can and cannot do. So we've laid a good foundation for the next panel where we say, is the world ready for a global digital currency? The panel will be moderated by Ms. Jennifer Dorr, the representative of the French Digital Asset Association, also a senior advisor for the giant law firm, and a former regulator who will moderate the next panel. Thank you.
Our panelists, please. Je me mets au bout, allez. So one mic for 2 people, so we have to share and try to converge, because we've heard the viewpoints of Dante Disparte from the Libra Association, then from Olivier Garçon from the EU Commission, and then from a central banker. So now it's time to converge and find some common ground. Please, I'm going to take a few minutes to introduce our dear panelists. So you know some of them already. So Olivier Garçon, Director General for Financial Stability, Financial Services and CMU at the European Commission. We also have the honor to have Yuko Kawai from Bank of Japan, General Manager for Europe and Chief Rep in London. We also have Dante Disparte from the Libra Association. You're the Vice Chairman of the Libra Association, but also you headed the Policy and Communications Department. We have 2 new panelists joining. Dick Bellman from the ECB. Dirk, you're leading the innovation team at the ECB. And we also have Junpei Miwa from the GFSA, the Japanese Financial Services Agency. Please give our distinguished panelists another round of applause. So the title of this panel is the world ready for global digital currency? This is very challenging to answer. Hopefully we have views from experts around the table. What we have tried to do is to articulate our panel around 2 axes of discussion. As Olivier Garçon mentioned in his speech, what are we talking about is key in these discussions. We heard a lot about Libra, but I think we can all agree that probably Libra is the tree hiding the forest. So I want collectively to enter the forest and discuss what is behind global stablecoin, what we are talking when we are talking about stablecoins, and what are the regulatory issues that can be tackled. This will be our first axis of discussion. Second axis will be more perspective, and we'll try to answer what a global digital currency can look like, who can be issuing this global digital currency, and for what purpose. Yuko, maybe we can start with first question for you, making the link with a very enlightening presentation you just made, explaining how centrally issued currency is working. Within this debate about global stablecoin, how you see global stablecoin challenging central bank money?
Okay. So I'm going to repeat some of the things I said. And I'll try to add the new aspects as well. So global stablecoin is like raising so many issues about the current system. I think the one different one different aspect is that the UX, how usable the current system is. So that's one of the incentives behind some of the central banks who is studying digital currency, whether we need to issue the UX, digital UX to our end users, non-bank users. So that's one. The other is, as I said in my presentation, that cross-border, the aspect, like interoperability on the cross-border remittance and payments, which I would say that we are particularly not good at. So those are the two issues, and two main issues which come to my mind. Having said that, as I said, there are other sides of the issues which are being raised by this discussion of the global stable coin. One is, who's going to protect the payment system or consumers as users if anything very terrible happens, at whose cost? So there is a reason why, in my very personal opinion, why the central banks are not very good at cross-border payments. Because we are concentrating ourselves on our domestic system using our domestic taxpayers' money. And if somebody needs to protect some troubles in the international sphere, who's going to do it in whose cost? I think that would be the question we need to ask to ourselves. And it really doesn't mean that it of course includes how to avoid the criminal how to avoid the crimes like the money laundering and also the money laundering and frauds. But it's not limited to that. There can be any kind of cyber incidents which may not be criminal, which may be just operational risks. So I think those are the issues that come to my mind.
So much, Yuko. Maybe we can hear the counterpoint of the ECB, because Dirk, you've been working, the ECB published an occasional paper last summer, in which you tried to build a taxonomy around stablecoins. Of course, so-called GSC, Global Stablecoin, is one of them. But can we go a little bit further within this forest of stablecoins?
Happy to go further. Thank you. I think it's important that we don't focus too much on one particular initiative. No hard feelings. But I think the ecosystem, the stablecoin ecosystem, is much broader than what we are discussing currently. One aspect is wholesale stablecoins. We're discussing now the retail dimension to it, but there are many projects out there in the wholesale space, and these initiatives might go live very soon. So we also have to prepare ourselves for this. And then, of course, we have to bear in mind, and you hinted to that we have already stablecoins. Olivier, you also mentioned this in your speech. It's not a new phenomenon. And the study we did, yes, we have at minimum 54 stablecoin initiatives already, 24 of which are in existence. And they all show different designs. And this we should bear in mind. It's not only about a Libra-type stablecoin. Some stablecoins have an issuer, others don't. Some stablecoins have centralized responsibilities relying on a custodian, others don't. Some stablecoins use specific stabilization methods, for example, being backed by assets like funds or a basket of currencies. But there's more. It could also be backed by other assets held off-chain. It could be oil, it could be real estate. There could be also more innovative ways of designing a stablecoin. And these exist where stablecoins are backed by other crypto assets, and then normally use collateralization ratios above 150% in order to make sure that these coins are stable or close to stable at least. And then there are mainly projects on what we call algorithmic stablecoins. So it's backed by user expectations. Now there's a smart contract behind this, checking whether there's excess demand or supply. And this smart contract then is fed by oracles, by market makers, by exchanges, and then based on this tries to keep it stable. And are these coins stable? That's maybe also the question, and we also did an assessment there. We looked at the volatility, and we saw, okay, the first generation crypto assets volatility is on average 100%. And you see what the new generation, the second generation of crypto assets with stablecoins can offer. And yes, volatility ranges between 10 to 40%. So maybe some of them are not yet there, but at least they are much, much stabler than what we see, much more stable what we see with the first generation. So my point is being, we need to look at the forest and the individual trees. That's absolutely necessary.
Dirk, then switching to Dante and going back a little bit to the Libra case, given what Yuko and Dirk explain about from an economic and monetary standpoint these different categories, as well as the role that these new animals can try to do, how you will position Libra in this environment?
Sure, great question. So I think if we begin on what we can agree on, which is the first is this is an asset class that is now in its second act. I think that's a great way to describe it. It's also an asset class that allows us to do things in a public-private manner. At least that's the design principle we have outlined, where we would work in very close consultation with regulators and stakeholders and NGO and other actors. And so I think that the real questions we should also ask ourselves is, what do we have to lose if projects like these succeed? We do take the monetary policy questions very seriously, but if you think about the design principles of a purely constantly backed stablecoin in this manner, where the custodianship of the reserve is not in our hands, but in the hands of well-regulated financial institutions, what do we lose from a financial point of view and from an economic point of view in terms of the transmission of monetary policy? I also think we don't ask nearly enough questions in this type of forum around what are the risks if we fail? What are the risks if these types of digitization efforts fail to pull more people into basic payments? Because ultimately the power of the fundamental technology that underpins these is to do things that take an enormous amount of overhead and an enormous amount of expense at scale, because the technology doesn't allow for any duplication, right? Any double spend, and you could sort of have some fundamental reliance on the trust that that technology underpins. And so no one is suggesting for an instant, for any of these stablecoin projects to succeed, they have to abide by a regulatory regime. And I think what we have to then ask ourselves as the regulators on the panel, or at least the regulated on the panel, is where do those regulatory regimes not allow for right innovation? So we have had really great engagement around the world along the concept of regulate activities, don't regulate technologies. And we see this first and foremost as a payment system, and much less so as a digital currency or even as a stablecoin. It's a proxy for payment settlement based on blockchain.
Olivier, I think the floor is yours to give maybe your view about how the current regulatory regime can tackle the new type of risk or the existing risk stemming from the Libra project in particular, but not only, maybe more globally, how you see regulation answering this new type of project.
Well, I would fully agree with my colleague from the ECB. I mean, and as I said also in my speech, I don't think the focus on Libra helps clarifying the issue. Because in Libra, in many ways, is just one type of stable coins. And what differentiates Libra from many others is scale. And scale creates in itself a number of issues that needs to be resolved. But stable coins are diverse. They of course are payment means. That's one of the things they are. And if there were only means of payment, well, we have in Europe, I think, one of the most up-to-date regulation with PSD2. And that would be extremely simple. You just take a license and you operate in the single market. The stable coins are not only a payment mean, they're also, well, they share actually a number of the characteristics of what we call e-money, at least in the legal definition that we give in the EU under the e-money directive, except one, they cannot be redeemed at par. because the e-money directive was conceived having in mind basically a digital euro type, or digital dollar, digital whatever you have, but pegged on one single currency. So the next question is, would it be enough to amend the e-money directive so that it covers also e-monies that are pegged on a basket of whatever, liquid asset, let's call it this way? Maybe yes, maybe no. Thirdly, you need to think of the reserve. I mean, if they're pegged on a basket of something, so you have some form of a reserve, Libra has a reserve, other stablecoins have a reserve. You could consider these reserves as an alternative investment fund. I guess that would kill the concept, because each transaction would be taxed. And you have many millions of transactions potentially. Also, if it's not an IMF, what is it? So going forward, there are quite a number of issues. And if we add to this that what I have described is a stable coin that resembles Libra, but you have many other types of stable coins. So we thought maybe, but we're very much in the process of thinking it through at the moment, maybe the right approach is not to try to adapt here and there all the various pieces of legislation, but is try to think about crypto assets in general, including stable coins, and what are the boundaries we want to put, what is it we want to protect, and therefore what are the characteristics of a legal regime for them, and which creates in turn a number of other issues, at least in Europe, like, do you want to rely in the end of the day on national supervision and make it national licenses? Do you want to have an EU regime for this? So, but all this is very much, I mean, as we speak, we are talking. One of the key things is that I think in particular, because some of these crypto assets are truly global, I think one of the things we would try to achieve in the frame of the FSB, BCBS, BIS, is to the extent possible at least have regulations that are based on the same principles. So I think this is an issue in which the only way you could imagine to let a truly global crypto assets becoming big is if you have a total alignment of regulations. Because if you have gaps, holes, misalignments, then in all these pockets, risk can build up. And it's not so much about the owner or the issuer of the crypto asset in question. I mean, as I said in my speech, I mean, even if, say, Libra doesn't want to take deposit and grants loans, how can you prevent somebody else to do it? And if you cannot prevent somebody else to do it, how do you regulate that? Knowing that you can do it virtually from whenever in the world to wherever in the world. So these are the types of questions we need to resolve.
Thank you so much. I think we all agree that we need legal clarity. And maybe, Yunpei, this is also something that you had to tackle within Japan at the GFSA, and Olivier also mentioned the need for international cooperation in that space. I know this is part of your job. You're very involved in international fora. May I ask you to give your insights about the needed changes at international level, and then probably at what you're doing at national level?
Okay, thank you so much. So, thank you. So before stating my first intervention, so let me briefly touch upon what we do first. So, Japan Financial Services Agency acts as the integrated financial supervisory authority, including the banks, insurers, the capital market, as well as payment services players and e-payment service provider and crypto asset exchanges. Compared to the other regulatory bodies in a global basis, Japan Financial Services Agency has a broader capacity and includes policy planning function for formulating the financial laws, regulations, and regulatory requirements. Using this capacity, we are able to commit the policy issues in timely manner and also address the fast-changing crypto asset market by multifaceted functions embedded to us. So back to the question. So firstly, as Olivier argues that we are in a regulatory storm in it. So I stress that Libra poses a new regulatory challenges, especially global global stablecoin provides new regulatory challenges to financial authorities and give rise to the additional needs for redesigning the regulatory capacity and rethinking of current regulatory perimeter to be more extensible. Within our current capacity of financial authority, we are able to address the issues of global stablecoin with coordination of regulatory arrangement in light of the consumer protections, such as on money laundering and cyber securities. Of course, we acknowledge that it is of importance that the efforts for global coordination is properly arranged with regulatory communities to design the additional capital framework and requirements. In addition, although the operational structure is not clearly stated in the white paper of Libra, so in current assumption, Libra Association will act as the main operator of the managing the digital currency. Compared with the crypto assets, such as Bitcoin, so, which do not exist explicit operators, do not have explicit human intervention. So Libra Association and Calibra, which may play the wallet and custody services, are kind of sort of the regulatory entity, as they have a clear role and function of operation, which can be within our regulatory perimeter. On the other hand, the headache issues posed by Libra and global stablecoins, which is supposed to be issued by the big techs, so contains contemporary concerns on data privacy and fair trade arrangements, which is a pretty difficult piece to regulate it, as these issues fall outside the financial regulatory perimeter. It is not possible to thoroughly address the privacy issue by financial authorities. In addition to that, in case of the Libra, so also they, in the white paper, they constitute an open community and open source of development and envision that it will become an open network based on the public blockchain after around 5 years transitional period, once after the Genesis block of the Libra is released. So this means that no single entity is responsible for the entire activity in Libra transactions. So in this assumption, maybe in the future, we'll be losing the regulatory target. So as they operate the Libra by diminishing human intervention. I stress that the regulator should not be counter-reactive to the underlying issues. So rather, we should be exploring new approaches, envisaging losing our regulatory capacity in the future. So this is why we raised this issue in G20 this year under the Japan presidency in light of the importance to design the governance of the decentralized financial system sustained by the blockchain technology. So we are now facing the regulatory dimension for exploring a new regulatory approach, and not merely by conventional proper coordination with global regulatory community, but also by extensible coordination, such as with the other regulatory community, as well as technological community. So JFSA leads such kind of initiative or multi-stakeholder discussion in the issue of the public blockchain based on the G20 arrangements. Thanks so much.
Thank you, Yunpei. Maybe before we go into the second axis of our discussion, maybe two key takeaways from this first part of discussion. The first one is the need for global cooperation. And actually, Dante, this will make your job easier, because if you have aligned regulation around the globe, you will have probably to apply the same compliance policy all around, because of course the rules are never the same, but they can oblige by the same principles, which this is why Olivier also calls for being the way forward. As Yunpei mentioned, the G20, and it's of course this is ongoing work as the Financial Stability Board. The G7 report was published 2 weeks ago, so this is probably the sense of history that we need to, at a regulatory and political levels, to come together to tackle these new regulatory challenges. Maybe the other takeaway will be that it's difficult to come up with a taxonomy that actually fit all the realities. And I liked what you say, Yunpei, about the need to come up with new regulatory ideas. We have some example around the globe of new type of laws with new type of definition, with new approaches that try to tackle these new financial animals. So probably we'll need to innovate by the law to tackle the new challenges ahead of us. Maybe to switch to the other axis of discussion about global digital currency by whom and for which purpose. Of course, the purpose here will be to reconcile private initiative with public ones. Maybe Yuko, we can start again with you. What will be, in your view, the motivations for central bank to issue so-called central bank digital currency?
Okay. This is again my very personal observation. The central banks have evolved. Have gone through so many years of evolution of how the money will work and how the money is delivered to the society. The oldest central bank in the world is the Riksbank of Sweden, which was founded like 350 years ago. So we started with coins, the metal coins. And of course before, and everybody knows that there could be like stone currencies and many other forms of currency. Then we moved over to gold reserve currency. Then we abandoned gold reserves, and then we are running the fiat currency, mainly in the banknotes. But away from the physical currency, we are also running the digital format, as I said, which is the deposit type. And in order to expand the deposit system beyond central bank's capacity, in order to deliver more money to the system, we are now asking the private sector banks to play a role, as I explained in my presentation. So we are evolving, actually. So in order for us to move from here to go for the direct issuance of the central bank digital currency or direct access to central bank's deposit, there should be the jump needs. The jumping new needs by our people that they would prefer the digital UX and the user experience to have their sovereign currency. So it's really like I think the answer is quite simple. If our people want it, we will think about it. And if our people want it is in an inclusive manner, if the majority of Japanese people would want the direct access to the central bank digital, we need to think about it. But in consideration of many other things, as I said, if we were to issue the digital currency, central bank digital currency, the society may lose the other merits of the current system does. So it's in the consideration of the balance.
Thank you, Yuko. Dirk, do you want to please give the EU standpoint on the issue? The ECB has been very vocal lately, so we're eager to hear from you about future tokenized euro or some other type of digital currency.
Thank you. First of all, the ECB is exploring the matter. I think that should be clear. We are doing theoretical research, but we are also doing practical experimentation. And we look at what we call wholesale CBDC, and we also look at retail general purpose CBDC. Wholesale CBDC, that means CBDC that is actually only accessible to financial institutions, means CBDC that is exchanged via central bank-owned payment systems. So the underlying question is, can we move our own payment systems to DLT? So this is actually what it comes down to when you speak about wholesale CBDC. And we're exploring this. We've been exploring this since 2016 with the colleagues from Bank of Japan, Project Stella. If you're interested, there are a couple of reports on our ECB website. And I think, even if we say from today's perspective, this is the standard response, from today's perspective, the technology is not yet ready for prime time because we offer the backbone of the financial sector, it's a large-scale application, but we also see many developments, that is, it evolves very fast. So I think there's a lot of positive aspects to blockchain, and maybe it's only a matter of time when it's ready. So then we have the retail CBDC, and that is the most complicated discussion, of course. For me, actually, it boils down to three key questions. Why, as Yuko already hinted to that, and why should we do that? What is the motivation? Second question is, what should the design precisely look like? And the third question is, how to implement? So is the why, what, how? The why, from a European perspective, is tricky, because you're often confronted with statements when you speak about central bank digital currency. Statement is, it's needed because you need efficient payment systems. But do we really need more efficient payment systems in Europe? You always need more efficient payment systems, no doubt. But we have already very efficient payment systems. Example is what we built and implemented in November 2018, the target instant payment settlement. You have an infrastructure you can settle in the fraction of a second for a fraction of a euro cent. Fine. It's there. So the question, is there a motivation from this angle? The second question is then, oh yeah, but cash is in decline, no? Looking at the whole euro area, maybe it will change. Most probably it will change. When I look at my children, it will change, I guess. But the growth of banknotes in circulation still outpaces GDP growth. 79% of all point-of-sale transactions are cash-based in Europe. So, okay, in the Nordics it's different compared to the South and to Germany, for example, where the ECB is located. But then also the argument is, oh yes, but crypto assets are gaining ground, and stablecoins now being on the horizon. But here we've studied this over the last couple of years. We published reports in 2012, 2015, and now also in 2019. We have been consistent in saying market capitalization of crypto assets is still relatively low. It's around about 1% of euro area GDP. And we also say that the links to the real economy are developing, but also not that to a large extent. So there's no impact from today's perspective. I'm obviously only speak about today perspective on our central bank role, functioning, and mandate. So is there a real motivation? Difficult to find a good motivation from our perspective. Then the second question, and this is what keeps us busy at the moment, is the what. What design features? Should it be anonymous? Wonderful question. Should it be interest-bearing? Should there be limits? And we are exploring this theoretically, but also do experiments. We now finished just an experiment where we explored to what extent the anti-money laundering directive requirements could be met by CBDC, which is put on a blockchain. Very interesting, but we need to understand this in detail before we can go in one direction or the other. And what is also a bit maybe underexplored at the moment is, I think, the cross-border dimension, because you have different design features, and then, okay, you always look at your own jurisdiction. What do you want? What do you need? But then we would also need to look at the cross-border implications. Can we somehow, or do we want to, control the flow of this CBDC outside our own borders or not? This is also a question which has not been discussed much. So this is the why, the what, and the how. Okay, this is the question whether DLT is the answer. And this is what we have been exploring. And as I said, from today's perspective, it's difficult. But there's a plethora of questions we have to analyze before really coming to conclusions. And we are looking at all these things in detail. We have a dedicated team looking at this in the ECB, even if we're not particularly vocal on this compared to other central banks. But we've been doing a lot in the past.
Very, very interesting to see the difference you're making between wholesale and retail, maybe Dante on the retail side, how you see the Libra project or other kind of private initiative helping the thinking of central banks going forward, especially on the retail aspect of a centrally issued digital currency.
Yeah, I mean, I think one thing that you've heard on today's panel is not only is there a need for harmonization around the regulatory treatment of these types of projects and the role they have in wholesale and retail and in different applications, but that in some respects we have participated very actively and very candidly in those conversations. From working with the G7 working group and meeting with various regulators, including ones on this panel, to be able to have a candid conversation about if the line of control and the line of innovation interest stops at wholesale applications from central banks, including the US Treasury recently gave a speech indicating as much, that there may be a great interest for a US digital dollar, but mostly as a wholesale application, effectively finding efficiencies in the current operating regime, that still leaves the last mile of the household and how the household doesn't today have access to peer-to-peer interoperable payment networks. That's the challenge we're fighting. That's the source of friction that a blockchain-based payment system can support, and all the more so if the CBDCs existed, then one half of my job would be done, in the sense that then I could focus on building a blockchain-based payment network that tears down the walls between one consumer and another. The CBDCs do not exist, and we think when they do exist, the goal is that we have a network that's interoperable, that plugs in, and that at some level also facilitates the very digital transformation governments, central bankers, and people who care about monetary policy are laboring under. And this is as cross-sector and as deeply collaborative as it gets.
Thank you so much. Before giving Olivier the concluding word, maybe Jinpei, we can dig in very quickly on, from a securities market perspective. What do you think will be the interest in having centrally issued digital coin or settlement coin backed by a central bank, or these kind of tools that we see developing on the market, because they are really helping innovative projects to develop? Okay, so
I have to mention the that the market functioning or the market type of the coins. Okay, so first, as stated in the G7 working group paper, so Libra, or global stablecoin, highlights the shortcomings in the current cross-border payment, high cost or rate payment structure. I suppose the digital currency may provide the dramatic change or drastic change in the efficiency of cross-border payments, but the market functioning may not be dramatically changed by the digital currency. So, but on the other hand, the expectation of the efficient market functioning. So this year we revised the regulation to incorporate the securities tokens into our securities framework and capital market regulation. So security tokens offering is a sort of engineering of the tokenization, and in combination with the smart contracts used by the format of the Ethereum-based, such as the ERC20 or something like that. In the case of securities tokens, a large liquidity is not necessary, as they have a motivation to settle among the beneficiaries based on the delivery versus pay. On the other hand, the issues highlights the need for the coherent tokenization from the offering to settlement and clearing the position, especially in the back office engineering. So the necessity of the global digital currency is highly motivated in the STOs. So as to the security settlement, it is not necessary to use a Libra type digital currency, which envisages the use of the broader retail payments, other than the Libra. So currently, as Dirk said before, the Quorum or UTT settlement coins, which are based on the permissioned blockchain, will be expected to use a wholesale settlement. So Wholesale regime, composed of the many major banks and as well as regional banks, so take part. So there is a huge potential to use such coins to attain the coherent wholesale settlement.
Thank you, Gimpe. You mentioned tokenization, you mentioned security tokens, you mentioned DVP. All these are, issues or trends we see on the market, and it's a perfect opening for the conclusion, because of course stablecoin or global stablecoin are only one thing when we looking at market development in the sphere of tokens. Maybe Olivier, to give you the concluding word, how you see things going forward from your perspective, with your political eye, especially with a new commission being set up, how you see things going forward?
Well, to the risk of repeating myself, I think that the new president of the Commission, Mrs. von der Leyen, and also Mr. Dombrovskis, have been relatively clear that the Union should move to a regulation of crypto assets that allows to reap the benefits while controlling for the risks that it entails. It's all good and simple at this meta level. It's awfully complicated if you enter into details. And it's awfully complicated because as this discussion illustrated, we're talking about something that is extremely diverse. I don't think it would make much sense to make a regulation for stablecoins, for example, because by definition we would create straitjacket effects, so we would stifle innovation. And at the same time it would probably be inefficient because the next animal would be slightly out of the borders of the legislation. So I think you need, as very often in life, to start from first principles. And the first principles, in my view, are the following. Are stability and innovation contradictory? I don't think so. I think that actually what is very likely to prejudice stability is to resist innovation. And simply because my premise is they cannot really resist innovation. Innovation will happen anyway. And in the end of the day, it will endanger stability because you have not be quick enough in forcing the right regulatory framework. Secondly, a number of the animals, let's call it this way, that could be created under the generic topic of crypto assets have many of the attributes of a currency. And there are a number of good reasons why currency have been the privilege of states and sovereigns in history. And I think this is part of the discussion we have around Libra. Think about a country in financial difficulties or in default in a general Libra diffusion time. What are the tools left to that country to regulate its economy? So I think this is one of the questions that colleagues in government ought to ask themselves, and certainly central banks alike. And this is where you have stablecoins and you have global stablecoins, because in this discussion size matters. So sovereignty is certainly something that comes into the equation. Third, first principles, well, what we're here to protect is, first and foremost, financial stability. As I said, financial stability may be best served by embracing innovation than by trying to resist it. Most of the time it is best served by defragmenting market, which probably technology does quite big time. But in some instances, stability is also best served by fragmenting market, because this is how you stop contagion. So the next question you ought to ask yourself for this type of global products or services is, what are the points at which you can cut the circuit short, and how, in case you need to? It's not so obvious. Market integrity is the second in line, and consumers and investor protection also. As I alluded to in my speech, you have a question in itself of how you regulate the products or the service, call it whatever you want, itself. But what is likely, in my view, is that if these services are successful, you will see a flourishing ecosystem developing around it. I mean, a bit the way the apps developed with Apple or with Android. I mean, it's only normal. I mean, if these products are successful, you'll see people trying to build offers of more complex services on the back of it. That's fine, but these more complex services are likely to be banking services. How do you control them? How do you avoid that consumers are deceived and lose potentially a lot of money? How do you apply the safety measures that you apply to traditional banks in this environment? So all these questions are questions that arise when you think about how you would deal with, let's call it, dematerialized currency.
Thank you.
One of the first principles we also have here on stage is to engage with our audience. And as the audience has come up with the next question, I would very much like for you, Jennifer, to look at this question, and that's the following. Shouldn't we move the discussion from payments to investments? After all, blockchain created digital scarcity that enables new economy, not just currencies. Who would you like to address this question to, Jennifer, or take it yourself?
Dante?
Well, I mean, this is the original sin, if you will, of the blockchain, or the original miracle. That it ultimately, with Bitcoin being more than a decade old, 11 years old to be precise, on October 31st, that an asset that was not controlled or issued by anyone, that had mathematical scarcity, enabled a lot of people to, it was the best performing asset in the last decade. So I do think many people are looking at blockchain-based solutions for investment and value preservation or speculation. This has been, candidly, one of the reasons many regulators are concerned about this asset class is either the first time they encountered it, it was one of their constituents lost a lot of money in an ICO or some kind of reselling the promise of Bitcoin. Or they learned about it the hard way, which was that a computer in one of their systems or organizations was held for ransom, and cryptocurrencies was the means of trade. Not to suggest at all that the one is correlated to the other, but investments have been the starting point for this technology. What's very encouraging is when those investments encounter principled approaches to regulation. Regulate the activity, not the technology. Today, many Western countries have pushed this technology into the shadows and have pushed it offshore into havens where the technologists and the technologies are thriving. And we haven't figured out how to really onshore them with a principle-based approach. And I think there's a lot to be said for democratizing access to value, ownership, title, and ultimately investor returns that today many people around the world are priced out because it's expensive to be pulled into that short of technology at the table.
Well, thank you very much. Thank you. Also, thank the audience for engaging with us and with this amazing panel. Jennifer, up to you to conclude this panel.
Just
and we'll go to the next.
I think we just want to thank everyone with a round of applause, please.
Absolutely. Thank you. Thank you, sir. Appreciate it. Thank you so much. So I see many people are converging into either some coffee or some further discussions. At this time, I think it's actually a very interesting junction that we've reached, because typically I'm used to pitch contests where people are asking for money, but in our next round, we will have Piteris Segofalis and basically explaining some EU funding opportunities for traditional innovative SMEs and startups. So with that, Piteris, I would very much welcome you on the stage.
Thank you very much. Hello, and I should have slides here. Do I? Rapulus. Yes. Here it is. This is the name of the panel. And there's this, and I go next. And yes, Europe. Okay. Yes, how many members of, sorry, for the organization in front of you? Right. 8, okay. So we can have chairs coming up while I'm speaking as well. This doesn't disturb me if it doesn't disturb you.
Have a seat for once.
Okay, so here we go. Europe for blockchain. Some of you have heard a little bit the vision that we have, but here it is in a diagram. We have a joined up political vision. This is the European Blockchain Partnership, the 30 countries building this cross-border European blockchain services infrastructure. Public-private partnership, the work with the International Association of Trusted Blockchain Applications in NOTBA, who are our partners here, and as well the European Blockchain Declaration foresees the possibility for a public and private partnership. We want to connect global and European expertise. This is the Blockchain Observatory and Forum, which is currently being renewed with a call for tender that is open right now. We're investing in EU research and innovation. We are promoting and enabling digital single market with legal clarity. We just heard part of the tokens equation, those for payments and also for investment. And as well, we are looking to have an enabling legal framework, possibly. We're analyzing it on the so-called utility tokens and smart contracts. This is something that the next commission will look at, and which is obviously a political decision up to the upcoming commission. The European Blockchain Partnership, you hear it today here, you see it here. This group is meeting here right now, the 30 member states. We have selected use cases. These are on the diploma certification, as well as regulatory reporting, self-sovereign identity, and the certification and publication of audit documents. The public-private partnership, you see at the International Association of Trusted Blockchain Applications, which hopefully the stakeholders are being implicated in, that also you see here. Advance, please. We're also working in international standardization. My team is involved with the International Standards Organization Technical Committee 307, looking at various aspects of blockchain, aiming to deliver standards. Rapoulos Lakavicius, who's here with us today. Also, we're working with Sensenelec, ETSI, IEEE, with all of these initiatives. This is ISO Technical Committee 307, covering a big part of the globe. The Observatory and Forum, which I mentioned, which is available to all of you. There are online communities, as well as a whole set of reports, the most recent one on legal aspects of blockchain that have been published, and this is up for renewal. So there'll be new opportunities to get involved in this global mapping, exchange of knowledge, and development of knowledge. These are some of the reports that are available. Also the General Data Protection Regulation and Blockchain, Identity and Blockchain, for instance. Also our colleagues and project who are present also here today and in the exhibition space, the FinTech project, that are looking at risk management of FinTech solutions and how SupTech, supervisory tech, can address that, sometimes using blockchain solutions, sometimes managing risk of blockchain solutions. We also have 7 Startup Europe projects that are online right now: Soft Landing, Startup Europe Partnership, Deep Tech for Good, My Gateway, Access to Europe, Nordic Angels, Startup Lighthouse. and you see some of the parameters of support that has been delivered. This is not just blockchain, it's startups and digital innovation in general, but blockchain is obviously one of the important technologies, and as this conference underlines, we see very much blockchain as part of a stack, along with artificial intelligence, Internet of Things, managing data in a citizen-centered way that reflects our European and not just European global values. We see a new wave of projects now coming up focusing on deep tech. I won't read into detail about all of them. There's a blockchain hub, among others. But again, this is this vision that Europe has of really being implicated in the emerging technologies and being a great place to carry out investments and development of these new technologies in a framework that respects the rights of citizens, but also looks to skills improvement and citizen implication in the adoption of the technologies. Why are we into blockchain and AI? As foundational, transformational technologies that are going to change the way that our economy works. We see a leadership role for Europe, not alone, but working with our international partners, many of whom are here today. We see a need for investments in AI and blockchain, investments for startups and early stage and growth stages, 100 million euro foreseen in 2020, up to 300 million. We would like to finance a portfolio of innovative artificial intelligence blockchain startups and incentivize further private sector investment, leveraging that which we will be investing. We see that the blockchain EU-funded projects are quite substantial in the EU. We have more coming, both in Horizon 2020, which is our research program, and I see a lot of people taking photos, which is of course welcome, but I'm happy also to make the slides available to you all. They're public, I'm on the record. And so we see more than 50 projects. We have some of those projects here. I mentioned the FinTech project, but also My Health, My Data. I'm not sure if the colleagues are here, for instance, from Decode, but this is another very much flagship project on the management of data utilizing blockchain. And here's some of the grant financing calls that are still open for 2020, and these are the type of things that are not useful to read out the details, but we'll have some presentations coming up. And again, we're happy to make this slide available to you. Blockchain for the next generation internet, most of all, where we very much see blockchain as a pillar of this decentralized, citizen-centered internet, but also other calls, next generation media, smart connectivity, other areas where blockchain is a solution, and it's also useful to underline, even in an audience of the committed here, that we're not carried away by the hype. We don't think blockchain is a solution for everything, but we think that it is a solution for a lot of things, bringing in efficiency, stakeholder engagement, and a new and better way of doing things. So in many of these calls, you have a choice on technologies. You can use blockchain. We're of course enthusiastic for it, but you are not locked into that. Also in the area of skills, utilizing the Erasmus program, we have funding available, call open until the 26th of February that you see, and an upcoming webinar that we encourage you to participate in if you're interested in this skills funding. I'm coming down to 30 seconds. I'm not sure if our Master of Ceremony allows time for questions. Obviously, I'm ready to answer questions either now or during various cocktails and so on while we're here, but also by email, Twitter, LinkedIn, other places where you can find me. So thank you very much for your attention, and I give control back to the Master of Ceremonies.
Yeah, I think we'll move to the next one. So thank you so much, Piteris, for this enlightening.
Should I stay up here?
Yeah, please stay, because it's my understanding that the next presenters have 2 minutes each to present away. Again, what I love so much about this Congress is to give away money instead of asking for money. So there you go. First, now it goes Bali.
Hello, I am Rapolas Lakavičius. I am part of the unit of Petris Zilgalvis, and now we will have short presentations of up to 5 minutes of basically focusing on the projects of which have open calls. If you have questions, please use Slido tool. We will try to basically take them up at the end of the session. Most of the projects of the open calls that we have are being managed by EASME, and the first presentation will be by our representative of EASME, please.
So, hello, all of you. That's not the presentation that I was expected to give. So, EASME is an executive agency. The objective of an executive agency is to implement program under the control of the European Commission. As you see, we are working on SME support heavily. We are working on energy subject, maritime subject, and environment subject. Today, we will speak essentially about SME support. In Horizon 2020 program, you have InnoSub project that are financed by the agency. The aim of this program is to test new innovation support developed by innovation agency, that's or cluster or SME intermediary, by funding them. So, in fact, we are funding intermediary, and the intermediary will fund SME to test the solution. You see that in the list of the call that were published, 3 are related to blockchain, cluster facilitating industrial value chain. You have blockchain and distributed technology ledger taken by SME, and then you have also peer learning of innovation agency. From this call, 5 projects were selected. So the first project selected was BlockIS. So it is cluster working together on the development of, on the acceleration of blockchain. In this project, approximately 150 SME will benefit from a direct financing of 2.8 million. It means that, in fact, the agency provides the financing to the intermediary, and the intermediary organize open call in order for SME to participate to this call. The financing that an SME can obtain goes up to 60,000 euro. The second project that was selected is Blockchains. That was in the second call, and there the idea is to match traditional SME and tech SME to accelerate the blockchain, the uptake of blockchain technology. Then you have the Blockpool project. Blockpool project is dedicated to 8 traditional sectors of the blockchain application, from which the financial, the health, the agro, the logistic. The idea there is to accelerate the development and the diffusion of the blockchain technology for 25 SMEs. The open call will be published in November, so at the end of this month. Then you have the Blockstar project. There we are tackling more as the first experience for SME to use blockchain. And then you have the last project, peer review. For this aspect, in fact, intermediaries are working together to define and design new innovation support dedicated to SME. It is for sure that for this project, they will work on providing a better support for SME for the uptake of blockchain technology. The 5 projects represent a total of 5 million euro that will be given that will be foreseen for SMEs, and it gathers around 250 SMEs. So I have finished my presentation. Thank you very much. Okay.
Hi, hello, good evening, good afternoon. My name is Andres Sanchez. I work at Funding Box and come here to introduce Ledger. Ledger is a project within the NGI initiative, the Next Generation Internet initiative that tries to build a more human internet where citizens are at the core. Within this framework, Ledger is what we call a venture builder for human-centric solutions. The purpose is to build solutions that give back to citizens control over their data. And for that, we are empowering people to use decentralized technologies to, like blockchain or peer-to-peer or DLT, to build these kind of solutions that somehow add in the benefit of the citizens. We are investing in 32 projects. We have already invested in 16. We open our second open call the 1st November, and we are offering up to 200,000 euros for these 16 projects, and a venture program of 12 months. It's a virtual venture program, so teams don't need to move, but you get into a process where you get what we call a researcher in residence. That is an expert in DLT technologies, that centralize ecosystems to help you to build your product. You get also a business mentor, so that your projects, we aim that has sustainability. And we also support you in access to market with some pilots and help you to raise further investment. What we are looking for? We are looking for product development. So teams working on developing a solution. We are mostly on early stage phase, so early stage projects with technology that is on the state of the art. So all projects need to have a research component and based on some kind of academic research. We also request that the teams are multidisciplinary. You request at least 3 profiles, an entrepreneur or business developer, an academic researcher, and a software developer. And of course, the focus is on data governance, on privacy by design, open software, and all the aspects that are related to the NGI, where basically it's about, as I say, give back to citizen control over their data. As I say, the open call is now open until the 31st January. If you want more information, there you have the site. We are going to make several webinars. We have a good community where you can ask questions. And please check it out, and thank you for your time.
Gracias. Thank you so much. Pia Padilla from Enable. You know, our first clients, not so long ago, were blockchain companies that were facing so many difficulties. And at some point, if we learn something, is that without the market, you cannot do anything. So what happened is that our partners, ECN, Frankfurt Blockchain Center, and a few others, just put their hands on us and said, hey guys, come over. Let's activate the demand side. So this is what we're trying to do with Blockpool. With Blockpool, what we are trying to set is a demonstration and deployment pool. And this is the list of partners, brilliant partners that we're working with, pure European DNA, so thanks a lot for the good work so far. But let me introduce you straight away to what we're doing. The idea is to actually have what we call the block pool. Put yourself in the shoes of an SME that wishes to adopt, test blockchain and DLT. Well, you would submit your application to the Blockpool Consortium. Then we would, in 6 weeks, in about 6 weeks, we'll give the results. And then if you're selected, if you're one of the 25 SMEs selected, then you're in for an acceleration program. And for us, it does not only mean that we will provide you with a ticket, free money, 30K per company. It means that we empower you with a lot of capacity building. Capacity building means that we'll organize international boot camps. We will actually have both technological and business webinars. And we will have a lot of activities like a MOOC, open online massive courses, and so on and so on. And that goes for, as pure support to the companies themselves. And this is how we activate demand. But of course, it's not only about the money. It's not only about the support to the very SMEs themselves. We need, and this is what we're doing now, and if there are developers, programmers, coders in the room, please do not hesitate, send us your CVs. We're now setting up the pool of expert service providers who will be able to provide the services that are sought by those companies. And on top of that, we have a number of activities that might be interesting for you as well. I already announced a decentralized conference organized by our partner, University of Nicosia, in 2020. And of course, in that context, one of the key aspects, something that we would like to push for, is the capacity building at the level of intermediary organizations. That's a boring word to say, incubators, clusters, federations, basically the ones who will bring the companies that will actually create this trust with the adopters, the new adopters, whether big or small companies. And, well, on top of putting everyone on the map, I would say that there is another aspect that we want to push for. We have risk analysis for business cases, specific use cases. We have regulatory analysis, so we do a lot of analytics in this project. And the idea is that with our lab that will focus on real applications, real business cases, well, the idea is to feed back to policymakers so that we make sure that we can actually adjust the framework together, of course, with our other partners. Thank you.
Good afternoon, everyone. I'm going to present Blockchains. The idea of Blockchains is basically fostering the use of blockchain within SMEs, for traditional SMEs. So the match is here between SMEs that are technological SMEs that are offering blockchain solutions with SMEs that are offering end-user products or business solutions. And so build use cases for blockchain within the SME sphere. What the project offers is a bunch of very interesting, I think, elements very designed for SMEs. First of all, there's funding, 50K equity-free funding for up to 50Ks, and in between there are different tranches of funding that the different companies can achieve. But also another bunch of services that are also very interesting and are proved by our SMEs that we have already working with right now are very valued, which is free access to the DLT infrastructure like Alastria, which is interesting for them because there's no gas and it's based on an association which basis is built mainly on SMEs. And then there's coaching, specific coaching, both business-wise and technical-wise. There's technical specific support for the development of the solutions. And there's training, so there's free access to the certificate program by the Frankfurt School the Blockchain Center of the Frankfurt School. And there is a specific action to make a matchmaking with investors and business partners or clients. So basically, trying to bring the blockchain services to foster use cases and solutions to traditional SMEs. We are in the middle of the first edition. There are 2 editions altogether. So we're grabbing a lot of information from our competing SMEs. We're starting the next edition, which will start in January. So I invite you all to get the full information. And if you're an SME, or either a traditional one or an SME, a blockchain SME, try to match with a perfect partner and apply for the project, because it's really proving to be very interesting. So, thank you very much.
Hello, my name is Antonio, and I'm here representing 2 projects FCSS is involved with, Block IS, which we coordinate, and Block Start, we participate. So in Block IS, we have 2 ways of supporting SMEs. The first one is through the open calls, where we will support 80 companies in total. Our first open call just closed last week, and we have 130 applications from 26 countries, and we are very happy for that. So our acceleration program is divided in 3 phases. They will have to present an idea in the end of the first month at Innovation Assembly, and then the top 23 projects go to the acceleration program, where we have business and technical services to offer them over a period of 8 months. In the end, we will we'll select and support 13 projects to go to the commercialized phase, where we put them in front of investors, and we already have investors interested in attending this section of the acceleration program. As we are in a SUP1 project, we are supposed to deliver innovation through clusters, and we have this concept of cluster missions. The first one already occurred, and in cluster missions we bring together different ecosystems to see how innovation is fostered, and alongside we have SMEs to learn how to get in touch with the new concept. So the next one is in Vilnius in a couple of weeks, where we are going to put side by side the clusters and really regulators, fintech regulators from the Baltic, and let all ecosystem learn from each other. So this is one of the projects, Block IS. The next one is Block Start, and here the concept is a little bit different. In Block IS, we are only addressing agri-food, logistics, and fintech applications. On blockchain, we don't restrict the concept of applications, but we also have equity funding, free funding for everybody. But there is a different approach. So SMEs that want to get funded, they have to go through a tool. They have to access our tool to assess if their business is blockchain ready or not. So the first question that they will need to answer is, do we need blockchain? If so, then they will start to enter the project. And our acceleration program is a little bit different. We first bring together users and blockchain, SMEs develop blockchain. We bring them together, try to understand the needs of the end users. Then the technology providers develop the solution throughout the program. And in the end, those solutions are piloted in SMEs. So each solution will be piloted in 4 or 5 real market applications. So in the end, they will be hopefully ready for investment. So in the end, they will be able to prove, I have this solution. It was piloted in these 4 or 5 applications. It's ready for investment. Any more questions? Please ask later.
Good afternoon. I'm obviously not Sonia Pavon. I'm Hugo Barros from the south of Portugal, of the University of Algarve, and I'm presenting and representing a project, a peer learning project called Peers to Blockchain. So we are a group of stakeholders from 3 European regions, from the south of Portugal, from the south of Spain, Malaga, and from Luxembourg. We are a quadruple helix context, let's call it, in the Algarve, connecting universities, social communities, civil society, business associations, and regional stakeholders in order to develop this sector at a regional level. In Spain, we have a tech park, which is the Tech Park of Andalusia, and a tech park in Luxembourg. So our main goal is actually to create and to give the SMEs the opportunities to get higher level of international cooperation and to share professional experience at a European and international level. What we want at an international level is to be able to develop as stakeholders these tendencies of blockchain, of these technologies at a regional level, to increase critical mass, to learn from one another, to develop and to identify what we can do at a region in order to be more competitive and what makes sense for us. So we basically have 3 actions. One is to analyze at a regional level, at a national level, what is being done at the level of state of the art. So as some of you may understand, for some regions, there's still a question of what is blockchain, what can we get out of it, what are the universities doing, what's the connection with the companies. So this is something that we are trying to develop. And the other one, trying to understand, again, at a national level, at a regional level, what is being done already, which best practices are being done, what case studies can we do, can we identify in which areas. The second action, again, as stakeholders, is to disseminate this in terms of a manual of good practice that we can disseminate nationally, regionally, and internationally. It's important for us to disseminate these case studies throughout our licensing agencies, our innovation agencies, to clarify what is being done, what are the trends, what could be done out of it to increase competitiveness in our regions. And third, finally, we want to develop and to help develop strategies for our own regions. Again, sorry, as stakeholders, what we want is this. It's not to influence directly the activities of the companies, but to be able to conform and to disseminate and to develop what kind of activities and innovation is being done in our region. So this is a little bit what we're doing. Thank you.
I would like to thank all the speakers, but we have one more person, George Gassos from the G-Connect. I would like to ask him on the stage, at least to show that he is here. George works with the ICT 54 call under Horizon 2020. This call was presented by Petris in his presentation. So yes. George will be here tomorrow as well from 11 until 1 o'clock. So please come at 11 o'clock to the EC stand and please ask him all questions if you are interested in participating in this call. Thank you, George, for showing up. And probably that's it.
That's all.
Or a few words.
No, that's all. Please. Well, yes, we have an open call in this moment. Is this that was presented at ICT 54 is relatively similar to some of the calls. So we will have an open system for innovators. So this address both SMEs, but also open source developers, university researchers, etc. The call is open, closes in the mid of January, and is addressing blockchain technologies by themselves and applications to the part of this information in terms of content and also to collective intelligence. So I will be ready to give you more detailed information tomorrow, 11 o'clock at the EC.
Thank you. Thank you so much. And now we go for the questions. In Slido tool, we have received some of them, and 2 questions are highlighted, but I see that they are more basically oriented to my head of unit. So the first question is, apart from EU grants and subsidies, do you have plan to launch dedicated alternative financial instruments like equity mezzanine for blockchain startups And another one which links with this one is, would you consider reputation levels around self-sovereign identities to enhance trust between participants at economic transactions conducted on blockchain? Please.
Those are both very nice questions, so thank you for them. On the grants and subsidies, this is actually something that was quickly passed over in my rather short intervention. I only had 10 minutes, but we are launching this artificial intelligence blockchain fund. It's something that we're designing in my unit along with other colleagues. The financing is coming from the EU research and innovation funding, but these are equity investments. It's going out through the European Innovation Fund, so a lot of you know this system. It'll be going out through venture capitalists who will be answering to calls. This will be for AI or blockchain, or AI and blockchain together. We expect probably there'll be more projects coming into the pipeline rapidly on AI, so we very much want to mobilize the blockchain community as well to participate. And I mean, especially if you're working in the convergence space and utilizing both of these technologies. As well, we have a call, I mean, almost closing, so it's a bit late, but for a investment support program for this fund, which is going to deal with matchmaking, also provide more information, again, to make sure that there is a pipeline of these projects, because it's obviously to finance perhaps the best prospects that we have in Europe, but also to help prepare other innovations, which might be a great idea or a great business model, but might need some guidance. So this is this AI blockchain innovation support program, and you should see that going online during next year. So look forward to that. As well as in the new multi-annual financial framework, the so-called MFF, the next budget, we're going to be coming forward with also more money going into public venture capital through the EIF, through some of our various programs. This will be more generalized for research and innovation in Europe, blockchain eligible, but not only blockchain. As we say, we're very happy to see a blockchain solution, but not everything is restricted to that. And then the other question was, I don't see it anymore, I think I can remember it, whether we could use, there it is, I'll go and look at it. Would you consider creating reputation levels around self-sovereign identities to enhance trust between participants at economic transaction or in economic transactions conducted on blockchain? Well, as I mentioned, the European Blockchain Services Infrastructure has a working group on self-sovereign identity. This is something that for the public sector, we will finance and be deploying, at least the beginning, in the next year or so. Then there is always the prospect, because of the European Blockchain Declaration, which was a political declaration signed now by 30 European ministers, also going beyond the borders of the European Union to Norway and Liechtenstein, to have public-private partnerships, as well as, I think the goal is very much to make these tools available as well to other private actors to utilize them. So using SSIs in this type of new token economy, or even more broadly, internet economy, utilizing the blockchain, I think certainly could be possible. Also, you heard in many of these funding opportunities, I would be surprised if such an initiative couldn't be financed in perhaps many of them, if not all of them. Also, we have the SME instrument, which in general, this again goes way beyond digital, never mind just blockchain, but they can give early stage financing. So the funding opportunities are there. The need is to develop your idea. We are looking, and this is again in the category of things that will be endorsed by the new College of the European Commission when we have our new group of ministers, on private identity. We have EIDS, and then there is the idea that we do need very much a European initiative on identity, so that it is not dominated by the platforms which have a business model of utilizing the data that they receive for proving identity in other ways, which are not necessarily to our minds all the time. So this initiative is possible, and in that case, there also will be unquestionably a push to technologically make it possible. SSID is one way. Again, we're not fixated only on blockchain, but we very much believe that decentralized solutions to identity are definitely part of the landscape of the new economy, new digital economy that is to be citizen-centered and empowering the citizen.
Other two questions that we have received are slightly technical. I would ask to ask them at the European Commission stand probably tomorrow. There will be people who will be definitely able to help you with this. And since we have here really a lot of speakers who work with open calls and work with startup community, maybe for a discussion, it would be interesting to ask your opinion about what could be done in Europe better to allow startups to scale, to really expand across borders of European member states. So who would like to comment on this question?
This is the million-dollar question. But I'll address one issue, which is constant coming back issue within the European institutions, I know, which is the harmonization of legislation. And I know you're working already on this, so in that sense, it's a good point to bring up. But it's important because already in the sphere of blockchain, we have the problem altogether that there's uncertainty as to what legislation applies or how to interpret current legislation so that it fits this new paradigm, this new reality of blockchain. Which is pretty new because legislation is defined more for a centralized world and it doesn't fit too much. So we need to avoid that each country makes its own approaches or its own interpretation of their legislation or its own interpretation of European legislation, and that we start having problems on that side. That would be one of the elements that I think are important. And of course, funding. So in that, bringing capital from even other regions to fund our projects here.
That's an incredible question because it's so large, and I think that you named it. I think many things are already going on, and that's a great thing. Now, one of the key challenges in my view, because we have shaped up some recommendations for the European Commission and the European Union in general in a study that will come out soon on behalf of the World Bank. And I think that there are many things already tackled. Now, I will just take my own perspective, which is the one of let's innovate in terms of financing, in terms of how we support companies. And one of the things that was great in what you just mentioned, Peter, was the EIC, for example, the accelerator and those new investments are very interesting because you can blend. So you don't just give away grants, you ask for payback money as well. And on top of that, there are new tools being developed, some on the valorization of IP, for example, intangible IP, and those new financing tools will be, in my view, the key to really make sure that we can scale them up. All other things, our partners in Blockpool colleagues, please feel free to stand up to make yourself known at some point. But I think we are dealing with that already. That's in short.
This is a difficult question, as everybody said, but I think the cascading funding on grants are really helping because a lot of SMEs can experiment new technologies risk-free, and they can also take the valid decision of this is not for us, this is not for our business, and it's good. But on the side of legislation, I would like to remind you that GDPR was seen as the biggest enabler for business across Europe because there was a single point of verification. But there are still cultural barriers in some countries where even though there is GDPR in full force, people are still resisting to adoption of some solutions made in other countries. So there are a couple of examples of concrete societal barriers to such solutions.
Well, my answer was similar to yours. I think that cascade funding is working great. Being a startup myself, and I deal with many of them, And when you tell them about this opportunity, equity free and all that, it resonates on them. I think something practical that it could be done is not that difficult. Maybe is to create awareness about the opportunities, because they are too atomized. People don't get to know them. People who is not working on the EU projects and all that, they don't. Many of them, they don't know about this opportunity. So we need to let them know that this exists, and maybe that is not that difficult. So to reach them, to go farther than the ecosystem of EU projects. That will be my short advice.
Hello. The good thing about being last is that, or almost last, is that everything is done. But I think that licensing is it's a question not only EU but national. The grants, but I would have to say like as you mentioned, a part of a lot of awareness, because there's a lot of someone was saying today, it was this blockchain. If you're a technical guy, it's you are in it. Most of the world is not. So for the SMEs, the startups, this is very hard. Someone was saying today, it's like someone discussing a e-shop in the late 80s, so it's difficult. So I think there's a lot of awareness. I myself, I'm from a university, and the gap between what the companies are asking and what the curriculums are proposing, and it's a big gap. So if I had to select one, I would say that awareness is really important now.
So thank you very much. I see that there are no more questions on Slido, thus we can finalize this session. Thank you for your attention.
Okay, so for everybody, I think thanks again for this whole panel and enlightening us. Thank you for all of you for coming here. I want to remind you, tomorrow morning at 9 o'clock, we start with an amazing interview here on stage. I hope I see you tomorrow. And also, please be sure to ask all these people all the interesting and all the pranging questions that you have. Thank you so much, and I'll see you tomorrow.